The New Year's Eve trading session saw the SPY down 0.36%, closing at 586.08. We are right in the middle of this zone that we've been talking about for the last couple of months. Major support zone here. Right below that is our lower dealer cluster, and you can see this is all negative gamma exposure, basically between 565 and 590 on the SPY. Zero gamma is currently sitting around 595, so we've got quite a ways to go in the current market structure to get back up into positive GEX. We've been in negative GEX for the past 4 trading sessions, following some brief trading in positive GEX territory. So I know a lot of people are talking about the big, scary head and shoulders pattern that's forming here on the SPY. There's a lot of reasons, of course, to be negative in looking in the options market. However, one of the factors that makes me still have a slightly positive bias is the volume that continues coming in at higher strikes. On Tuesday, we saw over 150,000 contracts traded at the 600 strike on SPY. Same thing on SPX at the 6,000 strike. Pretty sizable volume coming in, and this has been going on now for the past several trading sessions. So there's definite positioning coming in at higher strikes, something that we always look for as a potential signal for further movement into those high volume areas. That, of course, does not exclude the possibility that we could see a little bit of further downside into this lower dealer cluster zone. Again, everything is always based on probabilities and the push-pull of market dynamics. From our standpoint, in our Geek portfolio, we do have several bullish positions on, but we do also have a hedge utilizing the SPY and a couple of other vehicles to give us some downside market protection in the case that we continue lower. And just as a side note, our Geek portfolio, which is available for members to track, was up 138% in the last 11 months. We actually started this back on February 1st, 2024 for our members to track. And so you could, of course, see every single trade going through. And this is our weekly cumulative gains, not including compounding effects. This is just straight P&L. 138%. We're really proud of this strategy. And so our portfolio strategy, of course, includes hedging components, and that's one of the reasons why we saw the success that we did. And so I bring that up just to say that even though we do have a bullish bias coming into 2025, we, of course, are aware of this negative gamma exposure and the probability that we could continue to see a dip further, and that's where hedging against our positive bias comes into play. By the way, if you guys are interested in checking out our Geek portfolio, you can take a look inside our community Discord, link in the description below.
Thanks, Anthony. I'll just make a quick point about the Dow. We still see on DIA, that's the Dow Jones ETF, that price at 425.50 is above the whole moving average at 425.33, which to me is a long signal. The targets, if this thing starts to move up, would be anywhere from this middle Keltner channel, pretty close to 440, even all the way up to 450. We're definitely due for an oversold bounce. We did make a higher low compared to the 20th. We also see positive GEX, even though it's barely positive. It's a slightly different setup than with SPY and QQQ. So we have positive GEX, and we are right at the top of this G2 dealer cluster zone, but at least the components are there to potentially see a bounce higher as well, with the upper gamma at 440 being a possible target. Looking at the VIX, Anthony, I do see some reasons to be optimistic on the market as well. We're below the whole moving average, so that's a short signal for the VIX. If we do see a spike, we've got the Keltners pointing down. I think we would be hard pressed to see more than roughly 20, unless there's a complete outside shock that nobody foresees. So, it looks like the ingredients are there for a bounce sometime soon. And, as January goes on, I think it's typically a bullish month.
Thanks, Sean. Let's take a look at Bitcoin trading just under 95,000. You can see we've been in this zone between 90 and 92,000, critical support level. This is actually just below our lower dealer cluster zone. And if you've been watching our previous videos, we've been highlighting the large gamma exposure at the 100,000 strike and the 110,000 strike. We made a couple couple of attempts at both of these levels recently, mid-December at the 110,000 strike, and then, of course, bouncing last week. And here we are back again in the support zone. And so I think a high probability that we at least attempt to break the 100,000 strike yet again here this first or second week of 2025. And so this looks to be an interesting level because you've got a potential stop maybe below 90,000 depending on your risk reward tolerance. But this looks like an interesting point, in my opinion, for a long entry here.
Thanks, Anthony. I'm going to draw our attention over to the boring side, looking at Verizon, and the gamma is very positive. We do have this big cluster at 39. A lot of that expires this coming Friday, so a lot of that negative gamma is going to roll off. It certainly means, potentially we could see price stay under some kind of pressure until we get through that time frame. And we are right around that zero gamma level. And looking at the chart, I like that we've had this downturn that looks very similar to the Dow's chart, and we are pretty well above the 39.28 hull. We just regained that lower Kellner channel. So the chart's in a consolidation, but it looks like we're due for a trip back up toward the 42 area.
Thanks, Sean. Another stock with an interesting setup is Meta. Meta trading at 585.55. Here in our lower dealer cluster zone, you can see this has been a support zone here over the last several dips, anywhere from small to moderate bounces out of this level. We've got large gamma exposure concentrated at the 600 strike. We also have significant volume coming in. This was, of course, from Tuesday's trading session. Over 15,000 contracts coming in, traded at the 600 strike. So this looks to be an interesting area here at the 585 level for a potential bounce back into the 600 strike. For a first target and potentially upwards between 620 and 640 as a more speculative move higher. And don't forget, if you guys are interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. We are still running a holiday special, $300 off the yearly portfolio manager tier subscription. Use code holidays at checkout. We do have a few spots remaining and we'll be running this for another day or two, so definitely take advantage of that. You'll also get access to our premium channels in Discord. I'll put a link down in the description below so you guys can also check that out if you want. Thanks so much, everybody, for watching, and we'll see you guys in the next video.